Hello everybody, welcome to Newsnight. Tonight, IMANI Africa has dropped another bombshell alleging state-backed efforts to funnel insurance business to SIC Insurance with fresh leaked documents reportedly showing the state interest and governance agency SIGA influencing state-owned enterprises to divert insurance placements to SIC, sparking concerns about unfair practices and undermining industry integrity.
What is happening now is that state institutions are being guided to use SIT, which is good, but it should be transparent.
We'll tell you how the State Interest and Governance Agency SIGA has been deploying its influence to compel state-owned enterprises to divert insurance placements to SIC.
Policy think tank IMANI Africa has tonight published leaked documents that it says reveals a quiet state-backed push to concentrate public sector insurance business with the state insurance company SIC, specifically SIC Insurance PLC and its affiliate SIC Life Insurance Limited. The documents indicates that a policy directive from the State Interest and Governance Authority SIGA and the Ministry of Finance encouraged state-owned enterprises to collaborate more closely with one another.
And following that directive, SIC Insurance wrote to some state institutions, including Gihok distilleries, urging them to favorably consider the company when placing their insurance policies. A subsequent letter from SIGA is also reported to have directed state-owned enterprises to prioritize the use of state insurance companies, specifically SIC Insurance and SIC Life Company. We'll get into the details of those letters shortly, but speaking on Newsnight last night, the managing director of SIC Insurance, James Agyenim-Boateng, rejected the allegations of political interference. He's insisting that the company competes for business like any other insurer and does not benefit from any political directive.
I'm unaware of nor is SIC a beneficiary of any so-called political interference in the insurance space. Every single day when we come here at SIC, all of us go out to prospect for business, just like any other insurance company does. I think that it is most unfair to the reputation of SIC and all of us collectively for the efforts that we are making.
That's James Agyenim-Boateng. He's the managing director of SIC Insurance. Let's get into the details of the said documents we mentioned earlier, and Gemma has been going through them. Gemma, what do you have?
So what I'm about to read to you is on the letterhead of SIC Life Insurance Limited, and it's addressed to the Chief Executive Officer of Gihok Distilleries, dated 23rd December 2025. It says, we extend our warm regards and appreciation for the opportunity to engage with your institution regarding the provision of group life insurance cover for your staff. We value the discussions held and remain keenly interested in supporting your organization with a comprehensive and competitive insurance solution. As a state-owned organization, we are guided by the directives of the Ministry of Finance and the State Interest and Governance Authority SIGA, both of which continue to encourage collaboration and business partnerships among state entities. In this regard, we humbly plead that our institution are favorably considered during your insurance placement and next policy renewal cycle to enable us to provide quotations that accurately reflect your institution's need. We kindly request the following information. So they asked for the total number of staff and so on. And it continues to say that if your institution currently works through an insurance broker, we would appreciate it if you could kindly direct us to them for further engagement. And it concluded by saying, we kindly request that you share the staff information at your earliest convenience to facilitate timely preparation and submission of our quotation ahead of the renewal date. Another letter, this time from the State Interest and Governance Authority, dated December 11, 2025. And yesterday in my interaction with James Agyenim-Boateng, the MD for SIC PLC. I put that to him. It says that the state's interest and governance authority refers to its earlier communication to the chief executive officers of all state-owned enterprises and specified entities, directing them to prioritize the use of state-owned insurance companies, specifically SIC Insurance PLC and SIC Life Company Limited, for their insurance needs as part of the follow-up process to ensure compliance and to better understand the current level of engagement between your institutions and the various specified entities. SIGA kindly requests you to submit the following information: a comprehensive report on your engagements with SOEs, including the entities you have engaged to date, nature and outcomes of these engagements, pending or prospective business opportunities, and paragraph 3, challenges encountered in your efforts to onboard SOEs or deepen existing relationships, including operational, procurement, financial, administrative constraints. And then the fourth paragraph, recommendations on how SIGA can assist in facilitating improved cooperation and compliance among SOEs and in strengthening the uptake of insurance services provided by SIC Insurance PLC and SIC Life. So these are the two documents that IMANI Africa has provided. They also go on to put in this article that they've published on their websites some letters dated way back 2014 raising the similar concern.
Right, let's seek further clarity and bring in Kay Codjoe, who is an associate with IMANI Africa. Grateful for your time this evening. SIC Insurance is insisting it competes for contracts like any other insurer. From IMANI's perspective, what exactly shows the political interference rather than normal business competition is at play here?
Yes, good evening to your listeners. I want to emphasize that it is not wrong to support state-owned institutions. I've always been an advocate for that, and IMANI represents that. But in fact, it's very important that we understand the concern here. The support, whatever it may be or whatever form it comes in, must be done fairly and transparently, not through quite hidden instructions, as we have seen in the letter between. If you look at what is happening now, state institutions are being guided to use SIC more. It's a directive coming from SIGA, which is okay. But when one company is being favored, others don't get a chance to fair competition. And prices and quality may suffer as well. It reduces competition. And that is why IMANI believes this is sensitive. It's also important to emphasize that SIC is not fully owned by government, but it's partly private. So when some of these directives take place, it is benefiting the private shareholders as well. And I've heard Honorable Agyenim-Boateng speak to the matter. And for us, it's hilarious because we're not speaking out of vacuum. We know exactly what we're talking about. There's more to come. So I put it to him, if he says that they are not doing anything untoward, let's look forward to the coming days.
Right. And Kay, how widespread do you believe this alleged directive is across state-owned enterprises, and which institutions have you identified as being affected?
It will be premature to say much now, but most importantly, Glyco is suffering from some of these issues. There are quite a number of them. I mentioned Glyco because in 2014, during His Excellency John Mahama's first administration, they actually petitioned the president on a similar issue, and then the president agreed to resolve. Currently, it's repeating itself, and it's important that we capture that fact correct. So it's a repetition that we believe that since the president has intervened in the past before, and on the campaign of a reset, it's important that there's a fair share of distribution of the country's wealth. The private sector is not alien to our economy. They are also a very important part of our economy. So if there's a directive to support state institutions to succeed, well, it is good. We've seen the SIGA report. We know state institutions are suffering. So when some of these things are done, but it must be meritorious. It must be based on merit. It must be transparent. There are procurement standards in this country. So you don't go into coercing and trying to, and then we talk about it as a think tank and you think it's okay to massage the issues and we look forward to the coming days.
If you initially said there was no wrongdoing here, so what really is the issue?
No, let me say that clearly. I said it is not wrong to support state institutions to succeed, but it must be done with fairness, equality, and transparency.
Right, let's bring in Collins Agyeman at this particular hour. He is a procurement analyst as well. Collins, you've been listening to the conversation, the back and forth between SIC and IMANI. First of all, I want to pick your initial reaction to that.
Okay. I think IMANI is talking about competition. And as a procurement person, when there's competition, I just get my value for money. So competition is good. But you see, with the insurance, it works in a different way. The insurance works like the bank. We have something we call capital adequacy. There are certain loans, the amount and the risk that comes with it. One bank alone cannot syndicate that. So some of the banks will come together and then they give that loan depending on the size. And with the insurance too, they do the same. Have you heard of reinsurance? They can come and buy the risk and go and give it to a bigger insurer so that they take over. Same thing, we can now categorize the products within the insurance space so that the smaller ones, let's say car insurance and other ones, maybe they have their capital, they can cover it. But let's say a big a building like, let's say National Theatre. If National Theatre should go in flames, which insurance company, can come in to take that risk? So the insurance companies can come together and then they share the risk together. So it is not wrong having so all that I'm trying to say, they should categorize the insurance product so that everybody should get a bit of it. But when you say SIC, yes, and you know government is the biggest spender. It is the biggest spender that every organization wants to work with the government because it is huge. But if you go and give all that to the big brother, SIC, because it's for government,
right,
then it means that the other small insurance companies, they will fizzle out. And you know, once they fizzle out, employment will be affected, other capitals will be affected. So I think that they need to come together, SIC and NIC, National Insurance Commission, should be seen playing a fair playing game here. They should be the referee. Certain amount of risk you cannot underwrite unless you have other smaller insurance companies to come, because certain amount their capital will be above and no one can. So they should categorize the product and share it amongst. They shouldn't say that. SIGA has over 45 organizations under them, so everything is going to SIC because they have one father. When you do that, other insurance companies become orphans.
Right, Mr. Agyeman, I want you to hold on for me because thankfully we have the Director General of the State Interest and Governance Authority, SIGA, Dr. Michael Pesa-White, with us. Dr. Pesa-White, thank you very much for your time this evening. First of all, can you confirm to us that indeed SIGA wrote a letter to SOEs and you were directing them to prioritize the use of state insurance companies? And if the answer to that question is yes, what was the reasoning behind that?
So, good evening to your cherished listeners and to my colleagues, let me say the colleagues on the phone. think it is important to put this whole thing in a certain context. And I listened to the two letters that you referred to, one from SIGA to the entities or to SIC and SIC Life, and then the other one from SIC Life to Glyco. What Joy FM is not being told by perhaps IMANI or this case Mr. Kudjo, who is leading the crusade, so to speak, is that there is an earlier letter that was written to the specified entities, which includes the SOE, that probably has not been shared with Joy FM. Because the conversation needs to start from that particular letter. That letter was encouraging the heads of our specified entities to ensure that SIC and SIC Life, as the state insurers, stay at the table whenever there is an insurance conversation. Never in any of those letters were they being directed to concentrate their insurance in the hands of SIC or SIC Life. In fact, the whole thing was about making sure that they share. And when that letter went to the specified entities, including the SOEs, we got information from the Ghana Insurance Association or Insurance Association that they needed some clarity. They were gracious, the executives were gracious enough to come to the SIGA office. And in coming, they came with some of the private insurers that had a concern. We had a conversation of about 45 minutes to 1 hour. And that meeting was attended by the CEO of SIC Life and the CEO of SIC itself. The end of that meeting, everybody was very happy because they understood the letter as a letter that was necessary if you were in the position of SIGA, that is providing an oversight for state-owned entities, that was committed to making sure that we change the story of our state entities from the negativity to positivity. So they all left the meeting very happy that we had had that engagement and everything was okay. Now, it comes to me as a surprise that some of those particular private insurers, and I don't want to mention names now, but as we go along, since IMANI is promising that the coming days they will release more documents, we knew that we wrote only two letters, one to SIC Life and the other to SIC itself. As we go along, we will begin to also mention names of perhaps private insurers that are not being very honest in this whole thing. And I'm sure we get there, the public will be able to discern whether we at SIGA are attempting to protect and secure the interests of the states and ensure that there is value retention within the ecosystem of the state entities, are doing anything wrong by just asking that the entities we oversight to try as much as possible and do business among themselves as they do business with the larger public as well. Hello.
Right, Dr. Pesa White, you've mentioned of an earlier document that we do not have access to, but that earlier document or the latest one supersedes that earlier document that you're talking about. So all the concerns that IMANI have raised are valid.
So you couldn't have come to that conclusion without seeing that earlier document, because that earlier document went to all the state-owned enterprises, in fact, all the specified entities. In fact, that document is really the one that sets the ground for this conversation. The second letter, which went to SIC and SIC Life, made reference to that letter. And I am sure with the kinds of work you do at Joy, the pedigree of journalists you have over there, if you had read the first letter, you would have come to a conclusion that, this whole thing was a much ado about nothing, because SIGA wasn't even directing them at all. SIGA was encouraging them to make sure that one, SIC and SIC Life are at the table. And we even indicated in that letter, a line in that letter was quite clear in stating that we are not calling for blind loyalty or encouraging blind loyalty. And that when they are at the table, when SIC Life or SIC proves itself worthy of being given the business, they should give the business. And in the context of that, they should try as much as possible to share, and that we are not in any way trying to promote concentration of risk with any particular insurance company, be it a state insurance company or a private insurance company.
Doc, I'm going to refer you to the December 11, 2025 letter where you specifically directed the state-owned enterprises to prioritize the use of state-owned insurance companies. And in this letter, you said as part of the follow-up process to ensure compliance and to better understand the current level of engagement between your institutions and the various specified entities, this cannot be just encouraging partnership or cooperation between the states owned enterprises or among them. This is a directive which per your letter it needs compliance. Hello, Doc.
This is Collins.
Collins, please hold on for me. Dr. Michael Pesa-White, do I still have him on the line? Right. So I think we've lost Dr. Pesa-White. But Collins, you wanted to make a point.
I'm just wanting to say that you see, from us, that those of us who are in the risk business, we have something that we call, it is even risky in putting all the risk together for one insurance company to bear. It's risky. A time will come, you give everything to SIC and they will not be able to underwrite it. So they should be careful. Yes, they want to create business for the big brother because the big brother is the son or daughter of our father. Please, they should watch out, because if not, we have something we call concentrated risk, which is also risky. So yes, SIC want to make business, they want to have business, and all government risk should be brought to them. A time will come, they wouldn't even have the capital adequacy to underwrite such risk. So they should be careful, and they should just do categorization of some of the products so that all the smaller businesses or insurance companies can have a bite of it. You see, when government does something, they call it judicious use of government money, for the state money, even if in procurement. When you do the competition and all that, the small companies can also win government contracts. So they should just stop this concentration of risk, concentration of contract, where you give a billion CD contract to a single source. We should stop that. There should be judicious use of government funds.
Thank you so much, Collins. I think Dr. Pesa-White is on now. Doc, can you hear me?
Yes, I can hear you.
Right. The question I asked was that in the letter dated December 11, 2025, it's titled Directive to State-Owned Enterprises to Prioritize the Use of State-Owned Insurance Companies. Let me quote it for you. The State's Interest and Governance Authority, SIGA, refers to its earlier communication to the Chief Executive Officers of all SOEs and specified entities, directing them to prioritize the use of state-owned insurance companies, specifically SIC Insurance PLC and SIC Life Company Limited, for their insurance needs. It goes ahead to say, as part of the follow-up process to ensure compliance and to better understand the current level of engagement between your institutions and the various specified entities. This is clearly a directive from your office which needs compliance, and that's why you were writing this follow-up letter to the SOEs.
Okay, so this is what it is. First of all, let me correct an impression that the gentleman who spoke a few minutes ago was making. At no point was SIGA encouraging concentration of risk, not at all. And I will crave the indulgence of your very good station that usually when people come on the station, let them have access to the base documents or the primary documents that generate the conversation so that they can be better informed. I think at SIGA we are quite informed enough to know that risk concentration can be dangerous and that we wouldn't even encourage that in the first place. Now, that dovetails nicely into the question you just raised. At SIGA, we are expected to provide an oversight and ensure that within the larger framework of the reset, we turn our state-owned enterprises that are making losses into profitable organizations. And so it is perfectly within our purview to actually ask them to prioritize doing business within and among themselves. Let me tell you what, there is a 2022 letter that if I share with you, you would have noticed that the letter we have written to the entities that basically encouraging them to do was much better than what happened in 2022, where the state entities were being asked to do business solely with one entity as far as the provision of internet was concerned. If you like, we can share that letter to you.
We have that letter. Is it the letter dated the 29th of November 2022 that is directing the public sector cyber security to use only internet from, is it national information?
I don't know whether it was directing only public sector cyber security. It was claiming to be warning against cyber security and asking all entities based on a cabinet directive.
But we do have that letter.
To use
very well, right. Very well. So the point I want to make is that if you read the SIGA document that you don't have, the letter that you don't have, that I believe was deliberately concealed from you because it would have given you a better view of where SIGA was coming from, you would have understood that what we were doing was what anybody in the right sense in Ghana who wants value for Ghanaian investment and Ghanaian assets would do. Anybody fighting this basically is telling Ghanaians that that individual or he or she is enjoying the loss-making, environment that our SOEs are operating in now, and that nothing should be done about that. That is where we are coming from.
Concern that IMANI is raising is that you are just concentrating the insurance space into just SIC and not allowing for competition to play out here.
I don't think that concern has any basis whatsoever, because either IMANI did not see the original letter that says that, look, just make sure that SIC life. Look, there is a certain history to this. A few years before this government took power, insurances were being moved left, right, center from the state to private insurance companies. So asking our state entities that, look, don't continue that regime and that you must retain value creation within the state entity ecosystem cannot be seen to be something wrong. That is sound and logical, and it is good for the country. There is no way SIGA will discourage competition. We are not asking the entities to take their businesses without any critical analysis and assessment and take it to SIC. And frankly speaking, this whole conversation is unfair to our colleagues at SIC and SIC Life. These are individuals who within 1 year have been able to turn the fortunes of their entities, from loss-making or potential loss-making entities into high-flying insurance companies. Why would we want to beat them as though they were sitting down doing nothing and they were just being given businesses? I think that is most unfair and most unreasonable. And I would challenge the IMANI people to come to SIGA. If they were doing investigations, when they receive those documents, they should come and ask for clarity or clarification. Then they would have gotten a better understanding of it. I hear Kay Codjoe when he says that he also supports the need for us to promote state-to-state business. If that is the case, then what is the wrongdoing here? Those private insurance companies that are going quietly to IMANI and other civil society organizations to come and do advocacy for them should ask their CEOs to get out of their lazy chairs and go and do the real business that other people are doing, to shine their companies and put their companies in the right footing. This mindset will not help them.
Right.
It's a competitive environment out there. I have a responsibility to ensure that our entities are equally competitive. And that is what we are doing.
Right.
We are only saying that those that we manage must make sure they do business among themselves.
Right. Dr. Michael Pesa-White, thank you very much. That's the Director General of SIGA. And we still have Kay Codjoe from IMANI Africa on the line. Kay, you have about 30 seconds. You want to rebut some of the claims that have been made by the SIGA boss?
Yes. In fact, what he said is contrary to what we're looking at, because competition is irrelevant. So any industry to succeed sustainably, there must be competition, and competition allows better price, better service, stronger capacity, and so on and so forth. So it is only right that they must be competing. It is very reckless for him to say the private insurance companies and their CEOs should get off their lazy chairs and so on and so forth. That is completely out of context. We all know how the SOEs are struggling. So if we want to support SOEs, nobody's against that. We're saying that it must be done in a way that creates transparency and the integrity of the process should be sustained. I just want to re-echo something I said earlier on with regards to the reference to glyphosate in the petition to the president. This has happened before in 2014, where the Ghana Insurance Association through NIC, the National Insurance Commission, submitted a petition to the Excellency, and then he acted on. So we're not talking out of vacuum.
Right.
We're talking based on the fact that these are real issues. There are procurement standards in this country. There was a gentleman that spoke earlier and mentioned the concentration of risk and so on and so forth. So it's very important that we put it into proper context and not treat it like yeah. I was just listening to him and he was a bit all over the place with some of the points he was making. I think it's a bit...
Right, Kay Codjoe, thank you very much. He's an associate with IMANI Africa. And Jama,
yes.
We need to clarify a few things.
Yes, so Ken, regarding the November 14, 2025 letter that Dr. Professor White was talking about, in fact, this letter was part of the documents that IMANI presented on its website. It's titled Promotion of Intertrading Among State-Owned Enterprises, a placement of insurance business with State Insurance Company, SIC PLC, and SIC Life Insurance Limited. It was addressed to all board chairs and chief executive officers of specified entities in Ghana. And this letter, I must say, was part of the documents presented by IMANI. That's just for clarification.
Indeed. That brings us to business.